I'm giving a 60% probability this is a relatively normal cycle, in which case it would get to 150,000, let's say. I'm giving a 20% chance that it's actually a front-loaded cycle because of the ETF and other stuff, that maybe it gets to that 150 faster and then fades, which will be kind of pain for a lot of people who expect it to go into 2025, right? And then the other 20% chance, I think, is that this ends up being a bubble cycle. And so it looks more like 2011, 12, 13 than it does the previous one. And in which case, if you remember that cycle, it had a interim top correction. Everyone thought it was over, and then it just exploded again.
Raoul Pal, financial analyst, macroeconomist, and founder and CEO of the Real Vision Group, has given us 3 potential outcomes for Bitcoin in the 2024 and 2025 cycle, each presenting exciting and reasonably bullish scenarios for the leading crypto asset. Currently, the price of Bitcoin is sitting around $40,000 to $42,000. While some investors hold incredibly high hopes for Bitcoin's future, anticipating the asset to surge up to $500,000, Pal maintains both optimism and realism as he outlines 3 scenarios for how Bitcoin may unfold. In Pal's first outcome, he anticipates the asset to reach a new all-time high of $150,000 per coin. He assumes that the asset will be in a relatively normal cycle in reference to the standard crypto bull market. According to Pal, there is a 60% chance of this happening. In Pal's second outcome, he states that there is a 20% chance of this becoming a front-loaded cycle, where the asset will ascend up to $150,000 faster, but will fade as quickly, disappointing investors who expect the asset to maintain its status in 2025. His third outcome is the most bullish one. This holds the remaining 20% probability of realization. In this scenario, Pal envisions Bitcoin being in another bubble cycle similar to that of 2011 to 2013, potentially reaching an astounding $500,000 per coin during this cycle. According to him, this can happen if various affecting factors such as the impact of ETFs, monetary policy, and other economical factors align perfectly. With all of these possible outcomes from the expert, it's still important to remember that nothing is guaranteed, as many factors come into play. Pal recounts instances where investors sought precise price targets, only to be disappointed by the inherent inaccuracies. We will now show you clips from Raoul Pal's interview with Anthony Pompliano as he gives us his insights on Bitcoin's future status considering recent events. As you engage with our content, we encourage you to take a moment to appreciate it by liking, sharing, and subscribing to our channel. Ensure you've enabled notifications to stay updated on our insightful videos. Feel free to join the conversation by leaving your comments below. Your participation not only enhances the YouTube algorithm, but also plays a crucial role in the expansion of our channel. We appreciate your support, and we hope you enjoy the video.
Think about the crowd that got financialized in 2020. Again, mainly the millennial crowd, right? There's 110 million Coinbase accounts. And when I checked 6 months ago, only 9 million were active. So speaking to the guys at Coinbase, they're like, yeah, in normal activity, it'll get to 35, 40 million, and the top will grow as well. So there's a lot of money still to come in of people who participated last time around, have that interest, still have PTSD, will come back in. So maybe that offsets it. I don't know. I also have a feeling the applications layer of blockchain is going to bring in a lot more use case. So I'm thinking of this cycle as maybe the everything, everywhere, all at once cycle, when people have different unlocks for NFTs or inscriptions or different unlocks for smart contracts and some of the other things, and they can use it for everything from whether it's ticketing to real world assets. So it just depends how far that applications layer goes. If the applications layer doesn't make much progress this cycle, then you're dead right. We'll see rebalancing. Don't forget, they're also going to be issuing options on the ETF, and that changes the structure of markets as well.
Explain that more, because I don't think a lot of people understand maybe the blessing and the curse of this ETF approval.
Yeah. So what you've done, and it was always going to happen, is Bitcoin's now become financialized when it wasn't really. It was still had purity to it. Now, it doesn't mean it's impure because of this, but you've allowed a financialization layer. And what that's going to mean is that they are going to offer leveraged products on it. Now, options are kind of defined risk products, but what you end up with is in a very high volatility product, we get a lot of volatility sellers, and it dampens the market because they're always hedging, and that hedging structure can really change the nature of markets. Sometimes it creates acceleration points because everybody's short and suddenly the price goes through and everyone has to buy everything back. Other times, just by the ongoing selling of yield, selling of premium for yield, it slows down the whole market itself. So I do think that's a bigger deal than people expect. But the casino for options on ETFs is going to be quite amusing for a while as well, because if you think about how much the Robin Hood crowd use options on tech stocks, they're going to go wild on this stuff, and they've not been able to. For Americans, it was really hard. Deribit was not accessible to Americans. They're now going to start using options. I don't know when that launches, but it'll happen at some point. And that brings in all the market making firms and the investment banks and all of these other financial players.
Also, regarding Bitcoin's future, Pal notes that he's been receiving more phone calls from fellow billionaires, indicating heightened interest in Bitcoin within this influential circle for this year, 2024. Raoul Pal is considered to belong in the billionaire circle of macro investors regarding Bitcoin, along with other influential figures such as Paul Tudor Jones and Dan Morehead, who disclosed their ownership of Bitcoin in 2020. Raoul Pal categorizes these billionaires into two groups: those already deeply involved in the crypto space, like Alan Howard, and those considering re-entry after exposure in the previous market cycle. He elaborates that the second group seeks advice on re-entering Bitcoin, signifying growing interest among billionaires who may have initially approached the market cautiously but are now reconsidering. Raoul Pal believes these investors will likely stay this time, having gained a better understanding of Bitcoin through a full market cycle. In this interview, Pal also shares his insights regarding the main drivers of the cryptocurrency space and Bitcoin trading in terms of private capital and institutions. We will now bring you more clips as he elaborates his analyses on crypto and the effect of institutions in the current state of the cryptocurrency industry.
And I've basically proven that crypto is a macro asset. It's driven by the same forces of liquidity. And you relentlessly show that there's a narrative which is like, this is funny internet money, blah, blah, blah. And you show them it's exactly the same forces. So you can use global M2 or liquidity, whatever thing. And then you start proving, okay, had you used the same macro tools and chosen different assets, what are the outcome? And you find that even on a risk-adjusted basis, crypto is like 5 or 10 or 20x better. It's like that, how good it is. So I've banged that drum so people now realize, okay, I don't need to be scared of it because it's driven by the same macro cycle. If it's the same macro cycle, then anybody can trade it. And once you understand that, then it's just a matter of, okay, how much allocation do I want to the volatility?
Outside of the billionaire class, what about the institutions themselves?
I think the main driver of this whole space in terms of private capital has been family offices, because they don't have a mandate. They can do what they want. So we've seen and continue to see the family offices drive the VC business and the hedge fund industry. The institutions are still few and far between. The guys at Texas Teachers, there's only a few that have really allocated. Nobody's done a big allocation. There's a lot of noise that the Middle East is doing stuff, but I don't see many people actually coming back with tickets. So I think that's still to come. It feels that, because if you think about how the world works, even when we look at from XPAM, the hedge fund side, none of the hedge funds are on like the Cambridge Associates platforms and the big platforms. They just haven't done crypto. So the traditional way of some giant pension fund going to Cambridge Associates, finding what the right hedge funds are, and having Cambridge do the due diligence and then allocating doesn't exist right now. So they don't really have a way of doing it unless you've got some sort of pioneers within the shop itself. So it still feels like the major institutions of that type. We'll see more this time around. Yeah, we saw a reasonable amount last time. We'll see more this time around. It's probably the cycle after that. I think the ETF is a good thing because I know there's a lot of rogue fund managers who know that they can hoodwink the risk manager by saying, I've just got an equity. It's called IBIT. It's an equity. You don't know what it is. And it's Bitcoin, right? They will do that. There'll be a bunch of people who do that. And eventually they'll get the mandates to do it properly.
I do think that a huge source of inflows for the Bitcoin ETF, spot ETF, is going to be other ETFs just putting the Bitcoin ETF in their portfolio.
I think that's what BlackRock and Fidelity will do because they run these broad portfolio mandates, and they will show the accretive benefits of having Bitcoin in a portfolio. And so what they'll automatically start doing is adding 2% or whatever to client portfolios. So that's part of that ongoing bull flows analysis. And we saw this back in the late 90s when Goldman built these GSCI commodity products. Nobody had commodities in their portfolio. They were too volatile. Nobody wanted them. Cut a few years later, there's like 100 billion of them have been bought by institutions.
According to Raoul Pal, crypto can actually be considered a macro asset, and that its behavior is not isolated, but is subject to broader economic trends. By characterizing crypto as a macro asset, Pal suggests that it also responds to macroeconomic factors, positioning it as a potential hedge or alternative investment amid broader economic changes. Pal even states that, using different measures of risk-reward, crypto is about 5, 10, or 20 times better than traditional assets. He acknowledges that crypto's alignment with macro cycles makes it more accessible for any investor to trade, with the key decision being the appropriate allocation, considering its inherent volatility. Raoul Pal also discusses the dynamics of institutional involvement in the cryptocurrency space, noting that family offices have been significant drivers in terms of private capital due to their flexibility and lack of strict mandates. He observes a limited presence of traditional institutions, highlighting challenges such as the absence of cryptocurrency engagement on established due diligence platforms like Cambridge Associates. Despite some institutional allocations, Pal anticipates a more substantial entry in the current cycle and further participation in the subsequent one. He sees ETFs as a positive development, providing a regulated avenue for institutional investors and potentially curbing misleading practices. What are your thoughts on Raoul Pal's Bitcoin predictions for 2024? And what about his insights on the factors that are affecting the status of cryptocurrency? Feel free to share your opinions and experiences in the comment section below. If you found Raoul Pal's insights intriguing, don't forget to give this video a thumbs up, share it with your crypto community, and subscribe for more unfiltered perspectives from the best investors and advisors in the evolving world of finance. Your support fuels our channel's educational journey into the crypto space. Thank you for being part of our community.